Good day. We are going to take a look at Bitcoin. And since I think that a bull market has started, I give it an 80% chance. We will look for entry points, see what would be good entry points. So I'll go through the charts, and when I see the occasion to show you what I think would be some good entry points, I'll point them out. Let's go to screen share. As always, I'll start with my disclaimer. So please read my disclaimer, and if you're interested in my services, just go to the website and look them up. I do one-on-one coaching and so on. So just look around if you're interested. Yesterday, so that's the disclaimer. Read through it. I'll show it in French and German too. And yesterday, Bitcoin was at 8,163. So we go, and the TD sequential was saying that we go up. So now we should be at 8,200. We'll see if that's the case or more. The TD sequential said we go up, but we'll see what happened. Anyways, here's my disclaimer in French, for those of you who speak French. And here's my disclaimer in German. And now we'll jump into the chart. So we are at 8,184. So since we are 20 bucks higher than yesterday, TD sequential was this time right, but slightly, just slightly, 86. Okay. I expect price not have that it did not do much since we are at the same level, but I'll fastly go through the charts anyways. So we were at 7,700 not too long ago, and now we are on a 9 here, and that's it for the 30-minute chart. So I'll take notes as always. So on the 30-minute chart, we are on a 9 sell. So we are expecting a little pullback. On the 1-hour chart, we are on a 3 with confirmation, 3 up with confirmation. On the 2-hour chart, we are also on a 3 up with confirmation. And there was a 9, but it's long gone. There was a 9, and there was a pullback after that 9, but it's now long gone. Here there was 9 too, and we went up. So the 9s did work a little on the 2-hour time frame. And let's jump into the next chart. I have to take notes, so that's why maybe I'm talking a bit slowly. It's because I have to take notes about what I'm doing. And that takes some time. Now we go into the 3-hour chart. Actually, I'm going to change that. I said we are on a 3 up, but now we are on a 4 up. The next candle just started. Let's take a look at the 3-hour chart. The 3-hour chart is on a 2 up with confirmation. 2 up with confirmation. So short term, everything is looking bullish. So short term, we are up with confirmation 4 out of 4 for short term. Now we're going to take a look at intermediate term, which starts for me on the 4 hour. Intermediate, we are on a 2 up without confirmation. 2 up without confirmation. 5 hour, we are on a 1 up without confirmation. 1 up without confirmation. 6 hour chart. We are on a 7 up with confirmation. 7 up with confirmation. 8 hour chart. We are on a 1 down without confirmation. 1 down without confirmation. I'm on the 8 hour chart. Yes, 1 down without confirmation. 10 hour chart. We are on a 4 up with confirmation. 4 up with confirmation. I remember this flash crash, and it seems like if it happened an eternity ago, but it happened not. It was not so. I mean, so far away in the past. And since then, we established a new high, and now we are in between. We are in between highs and lows, and every time we try to break and have a correction, we go higher. So now it looks like an uptrend, but I don't know where it will bring us. I don't know how strong it will be. I'm not expecting too much from it, but who knows? Who knows? Yesterday I said that Bitcoin is not cooperating because I'm looking for a correction, and we did not get that correction. We only did get actually a flash crash, that's all. The 80% I was talking about is only that flash crash. We could not go lower than that. And the rest did not go lower than 7,400. And that's, for me, that flash crash is not enough for a correction. It's not a why is it 24% actually? Actually, it is 26%. I thought it was only. I thought it was only. That's because we are starting here. We're not starting there. Anyways, for me, that flash crash is not enough. And now we only went. The flash crash was 20%, but it's not enough. It's too short. If you had that flash crash and we stayed down there for that time, okay, maybe I would say that it's enough. But only this little flash crash, for me, it's not enough. It's not enough for a correction. So now we only had an 80% correction actually. The flash crash was before, and it was 24%, but it was only a flash crash. That's the problem with it, that it was only a flash crash. A 12-hour chart. We are on a 5 up with confirmation. And 15-hour chart. We are on a 8 up with confirmation. 8 up with confirmation. So we are bullish 6 out of 7. So intermediate chart, I give it an up to today, just as yesterday, with confirmation. So short term and intermediate term is bullish. Let's take a look at the 1 day, my long term. I'll start my long term with 1 day up to 1 month. So 1 day is on a 2 up without confirmation. So tone waves will be all over that trade, because for him, if you have a 2 trading higher than a 1, that starts a new uptrend. And he thinks we get something like this or something like that. And maybe he will be right, and maybe not. Here you had a 2 higher than a 1. You spend a little time here and then you went lower. So it does not always work. Here you have a 2. It will maybe go higher than a 1, but I'm not sure that we go higher. Anyways, we will see. So if you want to do some gambling, put all your money on the next trade. No, I'm just joking. Huh? I'm just making fun. 2 days. You're on a 1 up without confirmation. 2 days, 1 up without confirmation. 3 days. You are on a 4 down without confirmation. So we never did get a confirmation to a downtrend. To me, it still looks like if we are topping here. I mean, I would like us to go back to those moving averages. I said I'm going to talk about entry points, but I'll do that. Well, actually, I could do it on this chart. No, I'll do it later. I'll do it later. My entry point here on that chart would be at those moving average at the 200. If you could go back to the 200, that would be a good entry point. 200 EMA. Because we are that much above the 200 EMA, for me it is overextended. Let's see. If we take the 200, let's see how much entry points we did get during the last bull market. Actually, it doesn't look too good. Or does it? So you went above. Here you had an entry point. Here you did not get an entry point, but you were below the first 2 moving averages. So now we have to take the 50, the green one, as an entry point. We have to take that one. That's not what I want to look at. It's not what I want to look at. Just want to see if that one is the 50. Let's see. Yeah, it's the 50, just as I thought. So here, let's make some arrows. So here you had an entry point here. Okay, no, I'm not going to do it that way. It's too long. I have to use something else. So if you use the 50, you get an entry point here. And you get an entry point here. You get an entry point here too. It's close enough. You get an entry point here. So it's called buy the dip. You do get an entry point here. And here you get close. So if you're fast enough, you can reach it. And then that's it. So now we should still get an entry point around here. the green one. Okay, it will be moving up with time, huh? But you should get an entry point there. So if you take the green moving average, the 50 EMA, and those are your entry points when it pulls back to the 50 EMA. Let's do the same thing with different moving average, but now you're far above the 50 EMA, and to me that looks overextended because it's like if you buy here, it's just too high. You see, you went too high above the 50. You have to pull back at least to the first moving averages and then even go below them and touch the 50. That would be great. Let's see again. Yes, you have to go, at least you should be close to them. If you want a very risky entry point, you could go here, but that is a little risky in my opinion. I think if we go here, we will go to here too. But that would be the risky entry point is you take the moving averages that are higher. But anyways, you wait for a pullback. You wait for a pullback, and normally you wait for the pullback to the 50. Let's take a look at the 4-day chart. You're on a 3 down without confirmation. 4-day chart, you're on a 3 down without confirmation. I'll have to take off the arrows. They get in my way. Let's take them off. Remove all drawing tools. On the 5-day, you're on a 1 up without confirmation. The 6-day chart, you're on a 6 up with confirmation. On the 1-week chart, you are on a 9. You had a 9 sell. Now you are on a 1 down without confirmation. So the question is, of course, is the bullback from the 9 over or not? And I have no idea, but I was expecting more than that. That's all I can say. More than 80%. On the 2-week chart, you are on an 8 up with confirmation. On the 3-week chart, you are on a 5 up with confirmation. On the 1-month chart, you are on a 4 up with confirmation. On the 2-month chart, you are on a 1 up without confirmation. On the 3-month chart, you're on a 1 up without confirmation. And that candle seems huge. But you will tell me that here there was a huge candle too, here there was a huge candle. The last one was huge too. It's true. But after a huge candle like this one, you get a pullback. After a huge candle like this one, you go up and you go down also. After a huge candle like this, you go up and you go down. After a huge candle like this, I would like to see a pullback. 4-month chart, you're on a 3 down without confirmation. So we still have, how much up do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9. We still have 9 ups. And the 1 day was without confirmation. Let's just take a look again. Yes, the 1 day was without confirmation. So everything is pointing up today, just as yesterday. We'll see if the sequential is right tomorrow. if I do the same thing on the 1 week chart, where are your entry points? Well, when you pull back. So here you went up, here you pulled back the first time. That's the what, the 30 moving average? Yes, it's the 30. EMA, so you pulled back here, you pulled back here. So all that is an entry. All that here is an entry. You did pull back here, and you get an entry. You do pull back here, and you get an entry. You pulled back here, which is an entry. You pull back here, which is an entry. If you're not far away and you want to go because you have a 2 behind one, you can, but you should not go here when it's too far away. When it's you should be close to the moving average. Here again, that's what you call a value buy. And here again. And that was all because then the bull market ceased. But now you're too far away. So you have to wait until we pull back to the 30, which is around here for now. So if you pull back to the 30 or go a bit below it, then it would be an entry point. So right now you're too far away. Simply too far away. It is like buying here and you go down. It's like buying here and you go down. It's like buying here and you go down. So when you're that far away from that moving average, you have to go back to the norm. You have to go back down. So much for my entry points with the EMAs. Let's take a quick look at the EMAs just to see if they are all bullish, and I think they are, but let's take a look. 2 hour is bullish, then the 4 hour will be bullish too. Yes, so they are all bullish. They're all positive. And then let's look at the SMAs. Here, as I told you, I'm looking for the golden cross. If we get lucky, price get attracted to it, and that would be a nice entry point. Now we'll do the same with the SMAs and see where we get an entry point if you look at them. So I'm not having my arrow up. So I'll put it down there. So here you go above, and where do you get an entry point? You get an entry point here. You do get an entry point here. But you had a pullback here too. Huh? So you should buy at least between the green and the yellow one. You should not buy when you're above the yellow one. Here you went close. And it's on a correction. Here you went close too. Did not reach it, but you went close. Here you went close. So according to those moving average won't help you that much actually. You only can buy when you're below the yellow one. Or when you touch the yellow one like here. So actually you should look at the yellow one. What's my yellow one? Let's see. My yellow one is a 7. I'm hesitating. I think if I put it to a 14, it would be better. But I'm not sure if I want to make the change. I think a 14 will give us the bottoms in a better way then that one. It's not very helpful, but I just showed you. Anyways, we need even, so that chart doesn't help, like this, it does not help much with entry points. Let's see if it helps if I put a 14 here. It's a little better, yeah. You can go for it when you are below the 14. So every time you are below the 14, you can go for it. Below the 14, here you could even go below the 50. Below the 14, here you are below the 14, you can buy the dip. Here you are below the 14, you can buy the dip. You are below the 14, you can buy the dip. And then that's all for that bull market. Now you are not touching the 14, so you should touch at least the 14. So here, your entry point would be higher. It would be when you touch, and you could touch, since they're moving up, you could touch soon. You could touch when you touch the 14. Or you go below the 14. That would be your entry points. And you should, if it's the same as here, you should then be in the right order. I mean yellow, green, and red, just as here. So that would be an entry point. So we will get the golden cross. And then if we pull back to the yellow, moving average is at 7,000, we should be then, well, it will be even higher than 7,000. Maybe it will be at 7,500. If you pull back at 7,500, you could enter. But I would like to see a bigger correction. Next is COPEC, and ADX. So the first one is flat, if I'm not mistaken, yes. And the other ones are pointing down. So I give this chart a negative. Let's take a look at Bollinger Band. Bollinger Band. And what we are, I'll start with the 2-hour. I think that everything is positive, but let's just look at the 2-hour. So the 2-hour is positive. Take a look. If the 2-hour is positive, everything will be positive. The 1 day was negative. Let's see if the 1 day today is still is positive or negative. It's still negative. So the 1 day is still negative, but everything else is positive. So you have 1 negative out of 6. Let's take a look at MACD. I'll start with the 2-hour. I think that everything is positive, but I'm just taking a look. I'm just verifying. No, the 2-hour went negative. So the 2-hour now is negative. Let's take a look at the 4-hour. It's positive. Let's take a look at the 6-hour. It's positive. So if the 6-hour is positive, 1 day was negative yesterday. So let's take a look. It is still negative, but crossing. So 1 day is still negative. And 1 week is positive, and 1 month is also positive. Next, we take a look at Kaufman. And we are on the 1 month. So let's start with the 1 month. 1 month is negative for now. Then we take a look at the 1 week. We are negative too. No, we are positive. I'm sorry, I'm looking at the wrong. I'm looking at stochastic negative on the Kaufman. Then, no, positive, I mean, on the Kaufman. Then one day, positive. Yesterday was flat, today it is positive. 6 hour, it is positive. And the rest will be positive too. 4 hour is positive and 2 hour is positive. So you are positive 5 out of 6 on Kaufman. Let's look at stochastic. Stochastic is positive on the 2 hours time frame. Yesterday it was flat, today it is positive. Let's take a look at the 4 hour. We are positive too. Yesterday we were flat. Let's take a look at the 6 hour. We are negative on the 6 hour. Yesterday we were flat, so the 6 hour is negative. The 1 day we are positive. Yesterday we were positive too. And 1 week we are negative. Yesterday we were negative too. So I like us to go down and stop being overbought so that we can go long, because normally you don't go long when you're overbought on the 1 week. You wait for a pullback. If we cannot get an oversold, we should get a pullback at least to the middle, which would be nice. Here to the 0. Let's see. See here, you did get a pullback to the 0. Here you get a pullback that went even oversold. Here you did get the pullback that went even oversold. Here you were above, but then you did get a pullback. So normally you do get pullbacks. Right now you're oversold and you should not go long according to that indicator. And it's negative. And 1 month is positive. Candlestick. 1 day is positive. Yesterday it was positive too. 1 week is still negative. And 1 month is also negative. Six hour is positive. The RSI band. Then we are positive on every other time frame. Since the first one that has to go negative is a 6 hour chart. But it's positive for now. Now we have the Madrid moving averages, and we are positive on all of them on the 6 hour. Let's take a look at the 1 week. We are also positive on everyone here. We detach. For me, I don't think we did get a correction strong enough. And when you touch normally, you do get a correction, as I always tell you. But let's not talk over it again. I talked about it in length yesterday. So you're all positive on the 1 week. Just if I look at that, can we go higher straight on? So here we did get a correction. Here we stabilized a long time and then we broke out. So, I mean, and then we indeed can make a high, we went lower. We make a high, we will go lower, we make a high, we go lower, we make a high, we go lower. So every time you get a pullback, make a high, we go lower. Now we did make a high, but we did not go lower. So I would like us to go lower. If I just simply look at it like this. Next chart. Parabolic SRR. Stop and reverse. We are positive on both the 3-week and the 2-week, which according to me is the sign that the bear market has ceased. Next, we have fractals by Williams. And my favorite time frame is the 1 week. 1 week is negative. You had 2 red one, and last time you had 2 red one, you went down. Now we have 2 red ones, and I think we should go lower. But maybe the correction is already over. Just looking if I see 2 more here at 3, and then you went lower. Now you have 2. Okay, I think everything is positive except the 1 week. But let's take a look at the 6 hour. 6 hour is actually negative. Let's take a look at the 12 hour. I think it's negative too. Yes, it is. Let's take a look at the 1 month. It is still positive. So you have 1 positive and the rest is negative according to fractal. If you look at the 6 hour, we are positive on OXO. So if you are positive on the 6 hour, we'll be positive on all the other time frames because the fixed 6 hours is the first one that has to change. Now, next indicator, volume weighted moving average, unbalanced volume, and unbalanced volume RSI. So we are on the 6 hour and we are positive on everything. Let's take a look at the 1 week. We are also positive on everything. So everything is positive according to those indicators. Next, we have KK intraday MAS, candle body weighted, net force, and modified rate of change. We are on the 6 hour chart, and the 6 hour chart is bullish everywhere, positive. Let's go to the 1 week. The 1 week, this one was negative, but it's pointing up now. So maybe, normally when it's negative, we go lower. And we went a little lower, but maybe it's over. So you are positive on every on 2 indicators, but net force is negative. Next, we have the DMI moving average, and it's negative on the 6 hour. I like to look at the 6 hour time frame for that indicator, and it's negative. Now we have parabolic stop, smooth rate of change, B3, composite momentum index, and force index. We are on the 6 hour, and first indicator is negative, second is positive, third is positive, Fourth indicator is negative. So the fourth indicator is negative. And the last indicator is positive. First indicator is negative too. Let's go to the 12-hour. Yeah, positive, negative, positive, positive, positive. So the second indicator is negative, and the rest is all positive. And let's finish off with the 1 week. So we are positive, 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 negative, and positive. So there's net force, I mean, composite momentum index is negative. Next indicator. A parabolic letter on 6 hour is positive, 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 and here we have a low. So everything is positive, but we have a low. On the market thermometer. Let's go to the 1 day. We are positive, 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 and we have a high. So 1 day everything is positive, and we do have a high. So I'm taking the last candle to see if there was a lot of activity or not on thermometer. Let's look at 1 week. We are positive, 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 and high. 1 week, everything is positive and we are high. Let's look at 1 month. We are positive, positive, and high. Everything is positive and we are high. Last month, there was a lot of activity. I don't know what this month will look like, but for now, it is low activity. Next. Ultimate bar analysis. We are on 1 month. And everything except the second indicator is positive. Let's look at the 1 week. Everything except the last indicator is positive. Let's look at the 12-hour chart. Second indicator is negative, third indicator is negative. But the first one, the last one is positive. It was the same yesterday. Let's take a look at the 6-hour chart. Everything is positive. Yes, it was the same yesterday. The next indicator. So first, look at the Vermouth Fibonacci, and I'm going to take a look at the 1 month, which should still be positive. It is, and the 3 week, which should also be positive. It is. So that tells me that the bear market is over. Now let's look at strategy, MACD and RSI. So 6 hour is positive, I think, but let's see. Yes, it's positive. 6 hours positive. Let's take a look at then 1 week is positive also, and let's finish off with 1 month is positive. And 1 month is positive tells me that the bear market is over. Volume, let's take a look at 1 month, which is positive, and let's take a look at 3 weeks. No, I mean 1 week. 1 week is positive too. And last indicator, combined commodity channel. On the 6 hour, we are positive, and 1 week we are positive too. So everything looks positive according to that indicator. Now we take a look at my multi-indicator. And here I want to see which would be good entry points too. So you had a golden cross, and we are very close to the next golden cross. As I told you, I would like price to pull back to either that level or at least this level. That's what I would like. Maybe we don't get it, but that's what I would like. And let's see where good entry points would be according to those moving averages. So I'll point them out. And here we did touch the first moving average. That's an entry point. Here you touch again. It's an entry point. You touch. It's an entry point. You touch. It's actually when you touch the green ones or go below 3 and see you can go lower than that. It's an entry point. And all that accumulation phase are entry points. I'm not going to put arrows all over the place, but you get it, what I mean. This is all, those are all entry points. Here you get an entry point again when you touch. And then you get an entry point over here, where you touch them again. And you do get an entry point here. When you touch once more, you do get an entry point here. When you touch, that's called buy the dip. In a bull market, you only do that in a bull market. But I gave it 80% chance that the bull market is in. So those were your entry points. Now you have to wait for an entry point, and the entry point would be, if you take the first moving average, would be here. The EMA would be here. But you still have to go lower. That would be your entry point. Next chart, it's all bullish, so let's not talk about it. As long as it's all bullish, you can argue that the bear market is over. It was nearly all bullish during the last bull market too. Here we're missing a line. Let's see if we can put it back. You're missing that line. I don't know what color I should make it. Blue or white? Maybe. Next indicator. It's Bollinger Band, and that moving average, the green one, is still holding us up. It is positive. Here we are in the cloud, and I would like us to go out of the cloud, and we are negative. So I give it 2 negative out of 2. Because we don't have an arrow pointing up and we are in the cloud, I want us to be out of the cloud. Next, Ishimoku is looking a bit better because we have 2 green arrows already and the zeros above, which tell us the bull market has started, but we are still in the cloud. So I give it 2 2 positive out of 3. Then Ichimoku on steroid is all positive. Here we have one more Ichimoku, which is positive too. No, it is positive because the green is above the red moving average, but it is negative because we are in the cloud. So I give it 1 out of 2. Now we're going to take a look at Oscar simple moving average. No, my math indicator, and it's positive. It also told us that that bear market is over because we touched once and twice and then went higher, but we never went lower than that line. Now we touched once and we went higher. Should not go lower than 4,130. But I expect us to touch that line again, just 6,340. Now we're going to look at Oscar simple trend, Ichimoku, and NVT. Oscar simple trend on the 1 day is still positive, and NVT is still negative, and below it's moving average. So we should go lower. On the 1 week, it's the same. We are positive on Oscar, and NVT stopped being red, but no, it's red again. There we go. I was surprised that there was no red, but it's red again, so we should go lower, according to NVT. S parabolic SRR is positive on the 6 hour. And on the 1 day, we are positive too. Yesterday we were negative, but now we are positive. On the 5 day, we are positive, but getting close. And 1 week, we are positive. And the 1 month, we are positive too. Yes. So let's go back to the 6 hour. And let's look at our last indicator, which is safe zone and the chandelier. Here I want to see where my exit points would have been if I use that indicator. So I would exit here, according to that indicator. I would exit here because we have a close below that line. I would exit here, so then you have to go back in because you have a close below. I would exit here because you have a close below. I would exit here, and then you have to get back in now because you have a close below. I would exit here. No, I would not exit. Actually, the only way to exit is if you take the chandelier instead of that one. Here's no exit. Here's no exit. And there's no exit until the top. So there would have been quite a few exits if you take them. Every time you go up again, higher than the stop loss, you can enter again. It's just for security reasons you exit because you don't know if you go much lower. I mean, if a bear market has started and it is not a bull market. So you exit when you are below the safe zone. Here you are below, you exit. And then you see that you are above it again, you can enter again. Here you are below, you exit. You see that you are above it again, you can enter again. Here you are, you went, no, you did not go below. Then you didn't go below. So that would be the exit. And here would have been an exit too, because you went below. But now you could enter again because you are above it again. Okay, that was all for today. If you have any questions, look at my services, and see you probably tomorrow. Bye.